Hello folks, this is Sam Payne from Patient Financial with our October 2014 Educational Economic Update. In this month's video, we'll be discussing a couple of the economic events that occurred last month and give you some insight as to what they mean for you as an investor. Please stay tuned at the end for a required disclosure statement. October was a jittery month for financial markets, though the U.S. economy continues to do quite well. Despite slowing growth in Europe and Asia, most signs point to accelerating economic growth in the United States. Let's take a look at what happened last month. Investors got their first look at third quarter economic growth, and they found that gross domestic product grew at a whopping 3.5% for the 3-month period ending in September. Now that beat economists' expectation by a wide margin. Though GDP growth decelerated from its 4.6% pace in the second quarter, it was the fourth quarter out of the last 5 that the economy has grown more than 3.5%. Let's keep in mind that this is only the first GDP growth estimate, and it will definitely see revisions. Higher or lower, we can't know until more reports come in. However, at least one major player felt good enough about economic growth to make some major policy changes. The Federal Reserve announced the end of its groundbreaking quantitative easing programs, meaning that after October, the Fed will no longer purchase new bonds to support the economy. This means that the Fed feels good enough about the economy to take off the training wheels. They will, however, hang on to their $4.5 trillion in bonds for a while longer in case the economy needs a bit more help. Digging a little deeper into the news, analysts are reading a bit of a hawkish tone at the Fed's announcements, which means that there's a risk that interest rates will rise sooner rather than later. Because the Fed feels optimistic about the country's economic outlook, some analysts think that rate hikes might come as early as spring of 2015. Either way, we're confident that the Fed will look closely at all the data available before making any big decisions. Consumers are also feeling great about their economic prospects. Consumer confidence surged in October to the highest level we've seen since October of 2007. Overall, Americans are feeling much better about their job prospects and their ability to qualify for better jobs and raises. This is great news for consumer spending and the economy going into the holiday shopping season. Third quarter earnings season kicked off in October, and now that more than half of the S&P 500 companies have reported in, we have a pretty good idea of how companies did last quarter. Overall, earnings are quite decent, but reports indicate that U.S. companies continue to do basically well. For the 287 companies that we know about, total earnings are up 6.5% from the same period last year. Even better, revenue is up 5.1% as compared to a 4-quarter average of 3.5%. This means that demand is coming back and U.S. firms can hopefully look forward to a better revenue picture in the coming months. Looking ahead, investors will be looking carefully at earnings data and growth prospects for the rest of the year. Although third quarter earnings are looking decent, analysts are now looking forward at guidance about fourth quarter earnings. Though the domestic growth picture is looking rosy, many firms are worried about how slow global growth will affect their sales. With the recent strength of the U.S. dollar against foreign currencies, it's possible that exports will fall as they become more expensive to foreign buyers. As always, we'll keep you informed. That's it for the October Educational Economic Update. Once again, this is Sam Payne with Patient Financial signing off for the month of October 2014. If you have any questions about what you heard on this update or would like to discuss your personal financial situation, please give us a call at 888-285-5859. We'd be happy to talk with you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. The economic forecast set forth in the presentation may not develop as predicted, and there can be no guarantee that the strategies promoted will be successful. Please consult your financial professional before making any investment decision. These are the views of Platinum Advisor Marketing LLC, and not necessarily of Sam and Debbie Payne, Center Street Securities, or Brookstone Capital Management, and should not be construed as investment advice. Neither Sam Payne, Debbie Payne, Center Street Securities, nor Brookstone Capital Management gives tax or legal advice. All information is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Please consult your financial advisor for further information. Please be advised that presently Sam Payne holds FINRA Series 6 and 62 licenses in California and Texas. For residents of other states in which registration is not being held, proper licenses and registrations must be obtained by Sam Payne before proceeding further. No part of this communication should be construed as an offer to sell any security or provide investment advice or recommendation. Securities offered through Center Street Securities Inc. will fluctuate in value and are subject to investment risks, including the loss of principal. Investment advisory services offered through Brookstone Capital Management, LLC, an SEC-registered investment advisor. Debbie D. Payne, Samuel F. Payne, Payson Financial Insurance and Financial Services are independent of Brookstone Capital Management.